Hey Rob, can you hear me? All right, man. We are
I can
live
hear
for another
you. Let's
episode of
go.
Vibe Coding with Fueled by Chai, man. So, how have you been the last week, man? The last week was pretty
Been
exciting. There were a lot of things that happened.
yes, yes. A lot of things are happening. Things are changing super quickly with the AI landscape, and also Paradex has a few new products that they launched this past week, so we can get into that and talk about that a bit. But it seems like every week there's something new with AI, and the kind of the pace of change seems like it's accelerating faster every week. So
So, talk about the change in AI, and there were also a lot of changes in the political landscape. So, maybe matching both political landscape, AI, and things that we are building or you have built. Maybe we can do like a little check back with your trading bot. We need to give your bot a name, man. Let's call
yeah,
it
I
Baby
know.
Rock for now.
Yeah. Well, maybe we can have a naming contest for people that are watching here that have kind of been following along with what we've been working on and checking in on. So
For
so
context, those who are tuning in for the first time, this bot that Fueled by Chai has built is basically a new signal bot that trades BTC for him. Now, the flip side is because Fueled by Chai is a contrarian. When news is positive, it trades it shorts the market basically.
right,
So,
right.
but because of the recent updates in political landscapes, new ceasefire, there's a change in the market, and we are trying to see how it has performed in the last few days. So over
Yeah.
to you, man.
Yeah. So the interesting thing is since I launched this thing, I don't know, it's probably 3 weeks ago now. It's pretty much the news headlines have been bearish week after week after week or day after day after day. And the way this bot works is it will go out 3 times a day at each kind of market open. So New York market open, Asia market open, and then Europe market open, and download a collection of news headlines since the previous market open. And then it feeds that to AI and has AI tell it, hey, is this news bullish or bearish? And give me a confidence score. And then the algo makes a decision on whether or not it's going to, you know, be long or short based on that. So me being a contrarian, I'm going to fade good news and buy the bad news. And it's pretty much just been bad news since since the last 3 weeks, right? So, and that really actually hasn't changed a whole lot over this past week at all. So it's talking about a lot about liquidation. You see headlines about liquidations, price resistance, and stuff like that. And it's interpreting that to mean, okay, things are still pretty bearish. I'm going to stay long here. So what I had to do, because right now it's just producing a text file at every market open. It just prints out what its opinion is of the current environment, and then it feeds that to the algo, and the algo's like, okay, I'm going to stay long here. So I actually fed these files to Claude, so it's producing these files with the news headlines and the summary, and then the trades that it's placing. And I said, just show me graphically how this thing is doing, so I can actually like see something. And I'm being pretty conservative since there's no stop loss. I'm not doing any sort of risk management, so I gave it basically this $10,000 account, and I think I told it to trade up to like 25% of its equity in that. So the trades are, $2,500. So even if Bitcoin dropped 50%, it's losing 12. I don't know what that would be, but it'd be just a fraction of, its total account balance. So that's pretty much the only risk management that it's doing. So we can hop over here to I'll share my screen and let's see here. Or am I sharing? Oh, okay, there we go.
There we
Perfect.
go.
There we go. So I basically fed the signal file to Claude and the trade file to Claude and said, show me the confidence score that you've had over this past few weeks, and then show me the sort of unrealized profit and loss over the past few weeks. And So signal confidence has been fluctuating roughly between 78, 80%, which means it's pretty confident that the headlines are bearish um, during this time frame. And then we see the price chart of the unrealized gains or losses during this period. So now, actually, as of today, we are up $22 on this trade. So things are kind of recovering, but the headlines are still pretty bearish at this point. So my guess is, given like as you had mentioned, like all the stuff that's going on politically right now, there's so much. Uh, I don't even know what you call this. It's just there's so much drama happening, right? Uh, and you don't even know what's real and what's not. Like most of these announcements that are coming out of, you know, Washington D.C., mostly Trump or Pete Hegseth or whatever, it's just bluffing, is my opinion. And maybe they're trying to do it to move the markets a bit so they can make some money off of insider trading or whatever. But most of this is like, okay, they're probably not going to follow through on most of the stuff that they're talking about. So who knows even what's real and what's not. And it seems like sometimes that now the markets um, are starting to price that in. Although the announcement, and we can kind of get into this, how this affected another strategy I'm working on, but the announcement about the ceasefire, and then we saw crude oil tank, pretty quickly, and then the equity markets rally. How's that going to have an impact on things? And my opinion was, okay, this isn't going to last for very long. So I'm guessing that the news headlines are not going to get bullish anytime soon. So we'll see if I am right with like not following the crowd on the news headlines, but it's going to be like over a course of months if we see if this sort of strategy is going to work better from a herd following perspective or a contrarian perspective. So
I'm honestly very happy to see that the unrealized P&L is in the green. I'm not going to focus on a number, but like green is always good, man. So congrats.
yes,
Something is
yes,
working.
yes. Well, if you take a look at the chart, we were down about $200 at one point here. I can't read on here what day that was. It looks like it was the end of March. Bitcoin was, I don't know,
Yeah.
got down to like around 66K maybe, and that was probably the low point for now. And since then, it's kind of been in an uptrend. So there's some other variations I kind of been thinking about too with like a strategy like this. So instead of maybe instead of just going all in when the signal flips from like long to short, is instead of that, maybe you start dollar cost averaging, right? So the signal says, oh, okay, things are getting bearish. I'm going to just buy a little bit every week until the signal flips. And then I'll start reversing my position at that point. And that way, you're not just like all in at one point in time and you're just sitting there and holding on for dear life, no matter what the price does, right? Or some other ideas, you could put stop loss in there and say, okay, I'm just going to risk X amount. If it hits that amount, I'm going to be out until things then flip back around and and get positive at that point, or turn negative at that point, whatever the underlying sentiment was. So, but I built this all just using Claude. It's built with Python. It's talking to Paradex to get the pricing info. So, and right now I have it placing trades kind of in a paper account. It's not placing live trades, but hooking it up to Paradex to actually place trades wouldn't be too difficult to do at that point. So, um, and then I've also been playing around with the idea of doing a vault or something like that with this, just to see, because then you could track it in real time and people could actually go and see how it's doing if they wanted to actually put their own capital in to follow along with the news bot trader.
You know what, Rob? That's exactly what we discussed last week, right? So you build a
Hmm.
strategy, you're testing it out, you're finding ways and ideas to improve it, and you're using paper trading to kind of get the sense of its success before you level up into creating a vault, which I will support when that happens.
Yes, yes, yes. So, well,
So
I think
mm,
the most important thing though is we need somebody to name this thing, right? It needs a really catchy name. Then we can create a vault, you know, then we'll see how it does with actual like capital in real time. So
so that's a clippable moment. We want someone. We want you guys to name this bot that Rob has created, and you get to choose. And we will figure out a
drop it
reward
here.
for drop it in the comments. We will figure out a reward for you if you get chosen. And you only win if you get chosen by this guy. Oh wait, my okay. So Rob, you were saying that doing all this inspired you to create something else. Was that what you were sharing earlier?
Yeah, so, kind of and the other thing that's kind of inspired me too is I've been keeping an eye on what Paradex has been doing and the new, contract types that they have been coming out with. And, let me switch over to a different window here. So, here we've got there we go. Okay, so there's some new TradFi uh, instruments out here, and it looks like my screen is kind of cutting off here a little bit. So I don't know if we can zoom out, but or I can maybe move it over if that works. There we
Our
go.
backend AI is
Perfect.
really efficient, man.
Yes, we have amazing AI on this. I don't know what you guys did to prompt it, but it does an amazing job every week. Like it's it's been great. Okay, so the cool thing is there's a few new products on Paradex now in the real world assets category. So there was added this past week or two. There's two new oil contracts. There's Brent crude and there is WTI. And now these things, if you're not familiar with the futures markets, track two different types of crude oil. One is delivery from, Brent crude, which is, kind of Europe based, and the other crude oil is US based. WTI is the Texas crude oil. Now, the difference between these two products can be substantial sometimes, but for the most part, they move pretty closely to each other. They track each other pretty closely. So the reason this is important is because then you can do like an arbitrage or pair trading strategy, right? So if one starts deviating too far away, so like let's say the Brent crude contract, climbs $5 a barrel, but the WTI contract only climbs $4 a barrel, say there might be a potential to arbitrage that price difference or that movement between those two contracts. So I gave that to Claude. Now, the thing that is tricky about these is the funding rate differences between the two. And it has to do with how these perpetual futures contracts actually track the real world futures contracts. And it's a whole complicated thing about you need to roll from one month to the next month in the real world, and there's not a way to do that in the perpetual futures world. So you're kind of tracking how you would do it. I've been doing a lot of reading about how the exchanges are doing this, and it's becoming mind numbing because every exchange seems to do it a bit differently, and that causes the funding rates between these contracts to be very different at times. So I'd be very careful doing I'd tell anybody this. I'd be very careful about doing funding rate arbitrage on real world assets unless you really understand how they are pricing their contracts in comparison to the underlying real world assets they're tracking, because you're going to see some huge funding rate differences between the real world asset contracts, and it looks super deep. But if you don't understand how they're calculating those funding rates, you're going to get wrecked pretty badly. So just a word of caution when looking at these numbers. But okay, so let's just take a look at the price differences between like Brent and WTI crude. So I gave Claude a task. I said, let's just do a simple pair trade, meaning we'll buy one, we'll short the other when the price diverges too much, and then we'll close the position when the prices converge back. And I think I just did a hand gesture that sent my camera up here. Let's see if I can wave it to get it to come back down. Maybe not. I'm gonna have to move it.
Manually, yeah.
There we go. This thing like
That's
it's
cute
got
though.
some
Yeah.
AI. It has some AI built in, so when I move my hands too much, it thinks I'm gesturing it for it to do something. So, but anyway, so let's go back over to Claude here, and so I gave it a prompt. I said, let's build a pair trading strategy for Brent and WTI, and let's see what the results would look like. Now, another caveat is we don't have a ton of historical data yet on Paradex because these contracts are still pretty new. Because I wanted it to say, if we go back, however far we can go back, I want to back test this strategy basically. How would the strategy have done if we did it, in real life? And unfortunately, because these contracts are pretty to go back too far in time yet on it. So let's see here. So we'll pull up the Claude strategy now. I basically gave it a prompt saying, hey, let's build a pair trading strategy using a 15-minute time frame and using the Paradex MCP interface. And that's the MCP interface, if you haven't been following along week to week, is like their AI interface. It allows Claude and OpenAI agents to talk directly to Paradex and pull data out. And so you can build dashboards, you can build strategies, you can do all sorts of cool stuff by just talking to Claude, and then Claude knows how to go get the data at that point. So what we see here that Claude has done is it's basically constructed the pricing for Brent and WTI, the spread, and then the Z-score. And you can think of the Z-score as how far apart the prices are getting, right? So it's always better to normalize the prices. So instead of saying, the price difference between these two contracts is always $2, right? And if it fluctuates to 4, that means it's far apart, right? That might be true sometimes, but other times maybe the price is kind of normalized where the contracts are $10 apart, right? And it'll sit there at kind of that spread, and that becomes the new normal. Well, Z-score tries to normalize that, meaning, okay, it adjusts for the new normal. If the new normal is $10 between the contracts, it's going to say the Z-score is 0. That's like kind of like a balanced trade, meaning that's kind of the fair pricing between the two contracts. So when the Z-score gets extreme, which in Z-score terms, that might be a value of 2 or a value of 3 or -2, -3, it's like, oh, okay, things now are out of line. We need to take some action, right? So instead of looking at the absolute price, the strategy looks at that Z-score value. And when that Z-score gets extreme, then it says, okay, we'll place one trade in one direction, we'll place another trade in another direction. And then when the Z-score gets back closer to 0, we'll close the trade out because things are balanced at that point. So we don't have a ton of data, but it did place, it looks like 4 trades over the last few weeks since both Brent and WTI have been trading, and it produced. Looks like they were all profitable trades, so not bad. Basically, $4 per barrel. So however many barrels you end up trading in this, right? You would have had 4 winning trades. Now, in my world, that's not enough to like start trading something. I want to see hundreds of trades potentially to make sure this is, a statistically significant edge. But it kind of will illustrate what you can do with Claude as far as, okay, I got an idea about something. Let me just tell Claude about it, see what we can build. And if it looks like there's something here, then we can dive into it further and kind of further refine it, define some more rules, and maybe actually write some code so I can run this thing outside of AI. Because if you keep doing this in AI, you're gonna like eat a ton of tokens, right? I'm spending a crazy amount of money just on tokens, and I'm hitting usage limits on Claude. It's kind of maddening. But what you can have Claude do is build an algo, so either Python or Java or whatever your language of choice is, and then you can run that outside of Claude and not be using all of these AI tokens to continually test this, right? That's kind of my workflow. Is I'll create, I'll have an idea, I'll put it into Claude or OpenAI or whatever I currently have access to that I haven't hit my usage limit on for the day, and see if there's anything there. If it looks like something interesting, then I'll have it write up an actual algo to test it with, and I'll run that outside of Claude and see how it does. So this is one of those things where it's like, okay, this looks interesting, right? We've got four trades. The theory is nothing new. Pair trading two different oil contracts is not like a new idea at all, right? But doing it on the perpetual futures is probably new, right? Because these contracts are still fairly new across all exchanges, right? Like even Hyperliquid, which was one of the first exchanges, it hasn't been around for that long yet. So there's still a lot to learn too about the funding rates and how they're going to work and all that stuff. But the idea here is that you're going to take a strategy that people have done in the real world and apply it to on-chain assets, you know.
Got it. Rob, sorry, if I were to simplify it, technically what you have just started with, when you're sharing is trading, um, basically creating a strategy between like the price movements of um, markets, right? It's just a price movement. We're not doing arbitrage, funding arbitrage yet. It's just price movement, balancing. Is that
Yes. So you
correct?
could think of it as price arbitrage almost, right? Like both of these things are in theory the same asset. They're traded in two different locations though, right? So the theory is that because they're both oil, the price should move together, right? The price should be correlated between the two. Now, you have to know when the relationship is broken, though. This is the tricky part about pairs trading. Okay.
That's where the Z score
So
comes in, right?
this is where the Z score comes in part, but yeah. So I had somebody that showed me a back test, a long-term back test. Well, by some standards, it's long term. It was like 4 years back of WTI versus Brent crude, and it crushed it. Like it had an amazing equity curve, very low drawdown, right? So they were basically trading this fluctuation in prices between the two, right? So that because they should move in lockstep. Now I said, "Oh, that looks awesome. How did the strategy do in April of 2020?" And he's like, "Oh, my test didn't go back that far." And so I don't know if you knew what happened in April of 2020, but that's when WTI crude went negative. Like the price of the futures contract went negative. And like that has never, ever, ever happened before, right? An asset or a futures contract on an asset going negative. And it went negative because there was everybody was scared of COVID. The US was just shutting down at that time. And WTI, even though it's oil, just like Brent is, it's delivered at a different point. It's delivered in the middle of the United States. And everybody was screaming, "Oh my God, nobody's gonna buy oil anymore. We're not gonna have any place to store it. All the storage tanks are gonna fill up." And it's very expensive to shut down oil production and then bring it back up. So producers are would be more willing to pay people just to take the oil from them so they don't have to shut down their production rather than shutting the production down. So that's the prices went negative, right? Now that just happened for WTI. It didn't happen for Brent because Brent is a totally different delivery location and they don't have that issue with the storage, right? So the price difference between those two contracts like just went through the roof. And his strategy got wrecked. Like the price difference, I don't remember what it ended up being. It was like $60 a barrel difference, right? So this is where even though I stress this with people too, is like same thing with the funding rate arbitrage. This is another arbitrage trade. This is a price arbitrage trade. Just because you think you're hedged or you are hedged in some way because you're long one contract and short the other doesn't mean it's risk free. You're just assuming a different type of risk, right? And you still have to have some risk management in place. You can't just say, okay, I'm long WTI, I'm short Brent, I'm good. You know, I don't need to really pay attention to this until the prices converge again. There's risks there that are just different. They're different than doing a directional trade, right? And so you just need to have some rules defined about when to get out of the trade if you think it's going wrong, right? And the Z-score could be one of those things, right? You could say, okay, I'm going to enter this trade if the Z-score hits 2, but then if the Z-score keeps going and it goes to 4 or 5 or whatever, then I'm going to bail on this trade at this point, right? Because it's getting a little too crazy, and obviously there's something that I didn't account for, something that's not going right in the market right now, and my model wasn't built to figure out what to do at this point. So I'm going to just close everything out and wait for things to kind of go back to normal before I jump back in again.
I'm curious, what was the safety net you set for that strategy that you showed us earlier?
So the one I just showed you, or the one,
Yeah,
the news
the one
one?
you just showed
So
us.
okay, so this one, there is no safety net. So I didn't put anything in here as far as a stop loss or anything like that. So I would do that if say we had enough data for, say 100 something trades. Okay, and I was like, okay, let's write something up in let's have Claude write an actual like Python algorithm up to place trades and monitor them. Uh, then I would figure out how to add some sort of risk management to that on top of that. So probably first thing I would do is just put an overall stop loss in there. Say, if the account X percent, from it since when it entered the trade. So maybe let's say like I'm going to put a 5% stop loss in there, right? I don't care what the Z score is doing. The Z scores could look fine, but if my account's down 5%, I'm just going to cut losses and wait till the next signal before I jump back in. And then I might also have like a Z-score filter as well to say, okay, if I'm in the trade, even if I'm down 5%, but the Z-score like blowing up and my strategy hasn't like accounted for that sort of scenario, I'm just going to bail, right? Because the whole model has to work on data or scenarios that it knows about. If you're sort of in an uncharted territory, you don't want your model to be trying to figure out what to do in that, right? You're better off just sitting on the sidelines, letting the scenario play out, and then getting back in when things kind of return to normal. So maybe the model would have killed it and you would have made a huge ass amount of money, but you might have also like lost your shirt too. And it's better to tomorrow than Yeah, Claude might be eating my
Interesting.
bandwidth. Although the interesting thing is, yeah, we're not showing the screen now, so Claude isn't doing anything at the moment. But I can try shutting some my other helps at all. I've got like Discord.
Yeah, that seems to have helped.
Telegram.
So I thought I was the one that was choppy.
Alright.
And I realized because I'm not exactly having the best internet connection at the moment. So it turns out it was maybe all the programs that you were running that was eating your data.
It's yeah. I'll shut some of my stuff down here. All right. So I mean, we can talk about the funding rate stuff too. That's another thing I was having Claude take a look at as well.
Yeah. Sorry,
is
Rob,
funding
before we
rate
go into
arbitrage.
the funding rate arbitrage, I wanted to touch on just like a quick summary of like what you were doing with the price arbitrage for the oil stuff. So for the oil markets, you were essentially like trying to find a way to create an arbitrage strategy, and you were using data from Paradex via the MCP to kind of backtest, and you build a level of confidence with your strategy before you actually implement it. That's what you were essentially trying to do, right?
Oh, hey, in here, refreshing. It's suggesting I refresh my browser here really quick. So let me try that.
Okay, you guys have me for now. So, there's a note from the team that says talk about my favorite karaoke songs, but what maybe I will do is talk about where I am actually right now. So you will see this is a very different background from anything that you've seen me present from before. So I am actually in the Philippines right now, and I am in my aunt's place. I'm here to celebrate her 70th birthday coming up this weekend, 70th birthday party. So I am doing the stream from her garage. The reason why I chose the garage is where she stays right now in Lukban, Quezon, Philippines. It is 33 degrees Celsius in the day, but it is 23 degrees Celsius at night. And I have ended my summary of where I am, and Rob is back. Perfect.
I don't know how long I was frozen for, but I was talking for a while, I guess. And
Barely a minute. You're good.
let's see. Just checking
Okay.
with the guys
So,
to see if
oh,
I'm
you are clear. You look
actually
really clear to me.
okay.
Yeah,
Okay.
like the
Yeah, I don't
banana
know.
is very
Might have been a
obvious on
network
her.
thing. Yeah. Well, I figured I had to wear the banana hat today because that was the one that was in the thumbnail. So I went with that instead of the skull and crossbones bunny.
Wow, what attention to detail.
I know.
So I'm gonna digress. So that's like a baseball hat. It looks like I don't know what team that is with a banana, or maybe it's not
Yeah.
even a team.
It's the Savannah Bananas, and if you look them up online, they're kind of like the Harlem Globetrotters of baseball. So it's all sort of like
Okay,
trick
got it.
things, and it's like baseball with like backflips and okay, so yeah, so somebody just posted in the chat. It's like a circus plus
Circus and
baseball
baseball.
together.
Okay,
Yes.
got it, got it. Mine is shit.
Yeah.
What's
What is
that
that?
TV show with? Oh my goodness, why am I not recalling it now? That Korean reality show that is a little bit like Squid Games. Squid Games.
Oh, Squid Games. I can't get. I can't
Yeah,
do it. I can't do it.
yeah. It's okay. I only did season 1 and that's it. No more. All right. Back to business, man. So we were
Yes.
just talking about, we're just summarizing the strategy that you used in the previous example. So essentially, you found an opportunity to potentially arbitrage two different oil markets, and that's also partly because you found a strategy beforehand, right? And you were testing it out using Paradex data via MCP to see if it stays true, and you are back testing it before you maybe add improvements, safeguards before you push it live.
Hmm. Yeah, yeah, exactly. So if I wanted to kind of take this to the next level, probably what I would do is I would find a source of longer term history between WTI and Brent crude. And I would use that to kind of base my signals on whether or not to place the trades. And then the trades themselves could get executed on Paradex. Once there's enough kind of history, price history on Paradex, then you in theory could just use Paradex as the sort of the source of history and
Got it.
the place to execute the trades.
Got it.
So
I imagine if you want to execute on Paradex, you would need to maybe be a bit patient and gather the price history on Paradex because it's a perps. It's a RWA perp. So like there's no like off switch, right? Like it's running
ye
24/7. So the
right.
price movements would be very different when compared to traditional markets.
Yeah, yeah, that's a good point is, so typically what you'll see in the futures contracts is, now the futures have been trading pretty much 24/7 for a long time. So like the CME, has been doing almost 24/7. They might have some downtime after the US close, but for the most part, those markets are open. Now the liquidity after hours might be quite a bit lower than during the US hours. So you'd see probably wider spreads or just lower volumes in those markets. Now the perps, in theory, you'd probably see a pretty uniform distribution of volume. Might be a bit higher during Asia and US hours, but for the most part, these things are trading 24/7. And then the funding rate is going to be the other thing to kind of keep in mind with this. As I mentioned, if you're doing this with real futures, you got to keep in mind that the contract that you're currently trading is going to expire at some point. And usually with oil, you're trading the front month or the most current month, and that's going to expire in 3 to 4 weeks. And so then you're going to have to close that contract out and roll it to the next contract. Right. And there's costs associated with that. And with the perps, what you'll probably see is those costs are getting rolled into the funding rate itself. Right. And so that's going to be an interesting kind of thing to keep an eye on, and needing to track given how high or low these, or extreme, I guess I should say, these funding rates get on these real world assets is, yeah, you might be waiting for the price to diverge, but the funding rate differences between these two contracts might be pretty large, and so that could potentially affect the profitability as well. So, but yeah, I mean, especially if you're trading on shorter time frames, if you're looking at like the 5 minute chart and you're going to be basing your trading decisions on that, it might not take you might in a month or two here have enough data to start like having a decent sample size of trades to like draw some conclusions from Paradex, you know.
Got it, man.
Yeah.
All right. So this
So
is probably a great segue to your next point that you wanted to share with us, which is funding rate arbitrage.
yes, yes. And actually the other thing too we should just mention is option markets on Paradex are just coming online now, right? BTC just got launched in beta this past week, and I think WTI crude is coming up at some point. So once those start to mature a little bit and there's some liquidity there and there's some volume going on, you could even look at using the options markets as another way to kind of augment a an arbitrage strategy. So I'd keep an eye on that as well. So I go check out the options markets and see what's going on there, because as far as I know, I don't know if there's any other dexes right now that have options available, actually. So this is going to be something to keep an eye on. And it's going to be another way to potentially implement some arbitrage strategies once these markets really get going. So
Thank you for
always
that.
looking for ways to potentially make money. So anyway, don't forget about those. I'd go check in on them every once in a while and see what they're up to. And plus, there's going to be some more real world assets on the way too. So there could be some other arb opportunities there. I'm curious to see what products are next. I saw copper just came online today, copper market. So that's
Copper
pretty.
came online for RWA perps, and you are right. There will be more commodities coming up for auctions. So we have
Yeah.
like you said. You know what you said is perfect. I'm not gonna add more because I am still loose lips. So whatever
Oh,
Robbie said,
I
that's
was gonna
exactly.
ask if you could give us a hint on what the next RWA market might be.
You were on point. No, let me rephrase the grammar. You are on point.
I am on point. Was it the S and
Yeah, you
P?
are on point. Oh, well, it's it's well, there's a couple. That's also part of the things that are that's one of those that's being worked on, and then there's also like the energy sector. So there's going to be a lot of fun things we can do, in the next 2 to 3 weeks. Like in one of our episodes coming up, definitely is going to be very exciting because I think there will be a lot of opportunities that are very like Paradex specific. But I'm not going to
Okay.
show any more beyond that.
Okay, fine. Fine. I just saw Dan post a comment there. Is that's why you don't pay attention during meetings, because then you won't
Yes.
know what it is that
Yeah.
you're gonna leak.
I take very detailed notes, so I always like have them in my head, and I tend to review more than I should most times, but not tonight.
Okay, fine, fine. I'll let it go, but I'll be checking in to see what gets released next. But yeah, we got a little bit of time here, so we can talk about the funding rate arb stuff. Now, I also gave this to Claude, and just very briefly, funding rate arbitrage is when you buy an asset on one exchange, sell it on the other, where the funding rate on those two exchanges are different, and you're collecting that difference in the funding rate. Now, the interesting thing is Hyperliquid has an MCP interface now as well. What I learned as I was doing this, and I can share my screen again here. The funding rate function for Hyperliquid is broken, so it couldn't pull the funding rates in from the MCP. But Claude was smart enough to be able to figure out how to get the funding rates from the Hyperliquid API at least. So I could still do some calculations and try to figure out, okay, what might be some good pairs to trade. So basically I asked Claude, I was like, hey, I want to go to Paradex, I want to go to Hyperliquid. Can you tell me about what assets might be good for trading based on the funding rate? Can I zoom in on my screen more? I don't know, am I able to do that? Or is that, yeah, I'm zooming, I'm doing Control Plus on this, and because this is Claude, this isn't the browser. I'm zooming
Yeah.
in. Yeah, I'm zooming in, and it's zooming in on my screen, but it's not zooming in um
Live stream, yeah.
on
But
the
it's all
live
good.
stream
It's all
screen.
good.
Yeah. I don't know if you can do it on your side, because it looked like the browser had been zoomed in on when I had pulled that up previously. Oh, it's maxed out. All right. Well, this is as good as it gets, but if people want to see this, maybe I can take a screenshot of it and post it to X or something like that. But let's see here. Let's go ahead and click both exchanges. So it's showing me, and I ran this earlier, so the funding rates might be different now, but it's showing basically what the annualized difference in the funding rates are for each one of these assets here, and basically how much open interest is on Paradex. So open interest and volume are kind of an indicator of how much liquidity is there and how much you're going to pay in the spread to get into and out of the trade. So that's something that's very important when you are doing funding rate arbitrage, because you're going to collect money every hour on the funding rate, but you have costs that you're still going to have to pay. Commissions on Hyperliquid are not cheap, 4 basis points for every trade, so keep that in mind. You have to pay that on the entry and on the exit. and then Paradex, can't remember what the commission is, but it's smaller, quite a bit smaller than that, but it's still something to kind of keep in mind. So anyway, these funding rate differences look very juicy here: 185%, 157%. So things to keep in mind about the funding rate, though, and we could definitely have Claude build a model. Oh, that's a good idea. Dan is saying maybe a final cost calculator could be helpful here, where it could take into account the spread and the commissions, and then adjust maybe the percentage return, um, including those costs, right? So that's a good idea, because what you see here is like, oh my God, I can make 150% annualized, right? And that's just at 1x leverage, right? If you leveraged like 3x, you're making 450%, right? Now, like I said, though, you got to be super careful, because you're like, okay, well, this is a risk-free trade, right? You're long on one and you're short on the other, so you don't care about which way the price goes, you know. And I'm getting choppy again. What's going on?
You look fine to me on my end, though. But we just keep going.
Okay.
Yeah.
Yeah, interesting. Yeah, my machine seems to be doing okay here. I don't really have much open right now at this point. So, and
You
Claude,
seem smooth to me, and
yeah, I'm getting
I'm
10,
looking
10
at the
frames per
data,
second.
and oh, okay. I'm
Hmm.
looking at the data, and you know what's standing out to me? It's our resolve, because the OI is very high. So I imagine that's the highest liquidity, and like the annualized
Yeah, yeah. Yeah, so Resolve has a pretty high open interest. Um, so yeah, that's probably a pretty, or it might be a pretty liquid bet. Now, like I was saying about the leverage, though, you got to be super careful about that, because the risks are different with funding rate arbitrage. And this happened to me. Unfortunately, I didn't have a very large position in place when it happened, but on October 10th, I think it was, when we had the flash crash at the end of last year, I had some small funding rate arbitrage trades in place between Paradex and Hyperliquid. And fortunately, I had much larger ones in place like a few weeks before that, but I took them off because I was having a difficult time managing them. Meaning, like, if an asset goes up 50%, your balance on one exchange is going to be 50% higher, but on the other exchange is going to be 50% lower, right? So you got to transfer funds from one exchange to the other so you don't get liquidated over here. And I was like, I don't want to be sitting at my screen all the time keeping an eye on my balances, right, and having to manually move it. So let me figure out how to like automate this, and in the meantime, I'm going to pull my positions way lower than they otherwise would be. So I wasn't trading with any leverage at the time. Now, October 10th happened, right? And a bunch of coins just, pretty much everything, just the bottom fell out, right? And my shorts, I was short on Hyperliquid, and the shorts like crushed it, right? Because the price just fell out. But the problem is Hyperliquid ADL'd everybody, or a lot of people. And ADL is when they basically close your position, because there's nobody else, everybody else got liquidated, and there's nobody else to take the other side of your trade, because they don't want to take it. Like, their insurance fund doesn't even want to take the other side of your trade. And that's the purpose of the insurance fund, right? Is like, your counterparty got liquidated, the insurance fund will step in and be like, okay, I'll be your counterparty now. Well, that didn't happen. And so they were just like, we're going to liquidate the people even that had profitable trades, like even people that have plenty of funds in their account. And so all of a sudden, on these positions, you're left with an unhedged position, right? Long on Paradex and no trade on Hyperliquid anymore. So now you are exposed to the price difference, right? And so this is another risk factor with the funding rate arbitrage trades, is like the exchange could close one of your positions, or you could get liquidated, and then price is going to matter quite a bit at that point, right? So, and a lot of people learned this the hard way on October 10th, when Hyperliquid and a lot of other exchanges ADL'd a bunch of people's positions, and they're like, OMG, I'm sitting I'm sitting naked basically. I got an unhedged trade now, you know. So that's another thing to kind of keep in mind, especially when trading with leverage with these positions. So this is why creating a bot to monitor what's going on with um, your funding rate arb trades would be a very good idea, you know. So that spread looks juicy. So the two things to keep in mind are the costs, the slippage, and the commission, and then just monitoring your equity in your account and making sure you're not getting liquidated, or that your position doesn't get closed out by the exchange because it was ADL'd by them.
Interesting. So if we go back to your table, can the guys pull up the other screen?
Of the table.
I'm curious. Yeah, I'm curious. What do we do with this information? So I see what you're saying. I see the annualized number. I see the OI. Um, what's my next steps here? So let's say I pick Resolve as the market that I want to focus on. And I'm
So
gonna
this
sound
guy,
really
right?
dumb because I am. I don't know what the
Yeah,
next steps are.
yeah. So basically here, it's saying go long Paradex, short Hyperliquid. So the funding rate on Paradex, and this at the time I created this, it looks like negative 13 basis points, which means you're getting paid to be long. 13 basis points. I don't know if this is hourly funding rate or the 8-hour funding rate, but regardless, this is the short-term periodic funding rate. And actually, it's not showing what the Hyperliquid funding rate was at the time, but annualized, yeah. So you'd be collecting this annualized. So you basically want to go long Paradex, short Hyperliquid, the same exact amount. So like, let's say you're trading a $10,000 account, so you split it up $5,000 between each exchange. You go long $5,000 worth of Resolve on Paradex, short $5,000 worth of Resolve on Hyperliquid, and just sit there and wait. So I believe Hyperliquid pays out once an hour, their funding rate, and then Paradex pays it continuously, and it hits your account once you close the trade out. So you might see a difference in trade balances in your account because of that, but just keep an eye on like the unrealized profit and loss is what you want to watch. And then the other thing to keep an eye on, once you have this trade in place, let's say Resolve starts moving a lot in one direction or another, just make sure your balances between those accounts are roughly equal. So if Resolved is moved, say 50% up, and you're long on Paradex, your account's going to have 7,500 in it, whereas your Hyperliquid balance could be 2,500. So you're going to want to take 2,500 and transfer it over from Hyperliquid or from Paradex to Hyperliquid, right? Because you don't want to get liquidated because your balance is getting too low, right? On Hyperliquid. So that's the other thing to kind of keep an eye on. Either that or reduce your position sizes so you don't get liquidated. So that's kind of the basics of it. And then then you have a decision to make. Once the funding rates sort of neutralize, do you close the position out, or do you see if they revert back to how they were? Because the funding rates are constantly fluctuating, and you got to make a bet on, are they going to go back to where they were when you put the trade on? Or are they going to stay where they're at? Or they're going to reverse? And this is the other kind of call you have to make as doing funding rate arbitrage, because the funding rates can be sometimes pretty volatile themselves, especially depending on what's going on with the particular asset. If the asset itself is especially volatile, like the funding rates can whip around pretty quickly. And that's a judgment call that you're going to have to make. Is the funding rate going to stay that way long enough for you to make your money back on just the costs you incurred, right? And that might be another good thing for a calculator too, is like, how long does this funding rate have to sit here before I break even? How long do I have to sit in this trade at this funding rate before I get that commission back, before I get that slippage back, and then everything beyond that is going to be uh, profit at that point, right?
Good point. The math gets a little bit complex when you think of all the variables where you have to pay fees because there's your trading fees, there's also like the risk of like the price fluctuation.
Yeah.
Um, However, what you've just shared with us is basically this that you've kind of built already is just a decision making like first step. It tells you where to focus on, and then
Yes.
once you make that decision, then you got to put in like the due diligence to either check or create like a bit more like advanced automations to inform you of the changes and where your
Yes.
profits and
Yes. Yes. Exactly. And you can make this, you can make the Claude kind of dashboard a little smarter too to say, okay, besides just the funding rate difference, tell me how long has the funding rate been at this level, right? Because if it has only been for like an hour or even less than that, do you want to get into this trade, right? If it's been like this for 12 hours, okay, maybe it's a bit more stable, right? And so, yeah, there's some decisions to make about, okay, how stable is this funding rate difference between these two exchanges? And I saw Dan just posted a comment there. How long do I have to wait for a calculator? Um,
yeah.
yeah,
Dan
yeah.
Dan's on fire right now. Um, I
So,
got more questions. It's very fundamental stuff if you don't mind.
yeah,
Okay,
yeah, go ahead.
so based on this table, technically we were supposed to have like the hyperliquid funding rate. So looking at Resolve, because it recommended going long products and short hyperliquid, I mean on hyperliquid for Resolve, I would assume that it has it has already identified that hyperliquid's funding rate is positive, and that's why it's asking you to short it. Because essentially what this table is trying to do is to maximize your gains, right? So we recommend the
Hmm.
position where you're earning funding rate. So then when you say the funding rate neutralizes each other, is it like maybe they are switching like directions, or they are getting lower to the point where it's net negative, like it's like zero, net zero?
Yeah, yeah, no, that's exactly what it is. So, like, let's say the funding rate on Paradex is negative 200, and let's say the funding rate on Hyperliquid is negative 100, right? So in both cases, you're still having to pay on the short side, right? Um, but what you want to do is you want to go long on the negative 200 one, you want to short the negative 100 one because you're going to pay less on that than you collect on the long. So there's that still 100% difference between those two funding rates, right? Now, at some point those funding rates are going to converge, right? They're not going to stay that way forever. They're going to either get closer to negative 100, or maybe they both head back towards zero, at some point. But what you really care about is what the difference is between those two funding rates. You always want to be short on the funding rate that is lower, on the contract that has a lower funding rate. So that could be, if it's 200 plus, if it's a positive 200% and a positive 100%. Um, Actually, no, I got that backwards. You want to be short on the one that's higher. So if it's a positive 200 funding rate, you want to be short on that contract because the longs are paying 200% to the shorts and vice versa. So but all you really care about at the end of the day is the difference between those two funding rates. And when they converge back together, that's when you're not going to be making any money. And you as
Got
a
it.
trader need to decide, are they going to diverge again, or is that trade kind of over at that point and you just need to close it out, right?
Got it. So at the start, the two main variables are the the funding rate variance across both exchanges,
Mhm.
and ideally, if possible, like the consistency that these funding rates have been that way, or that direction, like how long it
Yes.
has been in that direction.
Yes.
And then I
Yes.
can make a decision from there, and then after that, it's about me being being diligent to optimize it.
Right. Yes, that's exactly it. That's how I would go about it, is like, how stable are these funding rates, what the difference is? Because I would rather, I could make the argument, I would rather trade a 50% annualized funding rate difference that's been very stable, like maybe it's been that way for days, rather than 150% or 200% funding rate difference that's only been in place for an hour, right? You know, because even though it looks juicier, it's still those costs that you're going to have to overcome. And you can only do that by waiting in the trade. So if as long as the funding rate difference sticks around for long enough and you get those back, then it's all good. But if it went up 150% and 2 hours from now, it's going to be 150% the other way, not only did you sink all those costs into it, but now you're actually going to be paying a funding rate difference, right? You're actually going to be losing money on that funding rate difference between those two. So I would rather trade a smaller difference, but something that's more stable than something that looks like super sexy, but it could reverse just as quickly as it went in. So
Got it. That's the same as dating advice we would give people out there, like go for the safer bet rather than someone who is like super hot. I don't know.
yes, yes, yes. But it's hard at the time. It's hard because when you're looking at it, you're like, oh wow, this rate is crazy, right? I should jump in on it. Like I can, if I'm doing the math, like if I hold on this for like 5 hours, I'm gonna make X amount of money. But you always gotta have in the back of mind, okay, what if things don't go that way though? What if the funding rate does flip? What is your plan gonna be at that place? So if you're always gonna do much better if you have a plan in place. Okay, here's what I think is gonna happen, but if this or this or this happens, what's my plan gonna be then at that point? And that's where a lot of traders lose money because they're only seeing the upside, right? But not putting any sort of contingency plans or risk management plans in place if things don't go according to how they think they will go initially. So
Yeah, exactly. That was good, man. I finally
yeah.
understand, like, I guess the basics of funding rate arbitrage after all these weeks of talking to you. Thank you for this, man. This was really, really helpful. I think this is
Yeah.
one of those like easy to start kind of use cases of data collection and like using MCP to do it easily with just English rather than coding it with APIs.
Hmm.
So this
Yeah.
I'm gonna try this.
Yeah, totally. Yeah, so if you can get the Paradex MCP hooked in the Claude and talking to it, like, yeah, you can with plain English kind of tell it what you want to do, or what you're trying to do, and have it help you like refine the suggestion and kind of dig into it. Ask it what your blind spots are, right? I noticed, I don't know what happened this past week, but Claude has been getting way more chatty with me and actually pushing back on ideas that I've had, which is surprising because usually AI is like very agreeable to what you're doing and will say, "Oh, that's a great idea," right? And I think we talked a little bit about this last week, but this week it actually like I had some ideas for some stuff I want to try, and it like listed out this whole bullet point list of considerations that I hadn't brought up yet. So I was like, okay, this is actually pretty good because this is like somebody that's taking a critical look at some of these ideas I have that I hadn't considered, and is providing me some actually constructive feedback on what I need to be looking at. So I would totally recommend just start throwing your ideas at Claude, or if you're using OpenAI or whatever it is that you're using, and and then you can start refining them and asking it what your blind spots are, what you need to consider, if you're wanting to do funding rate arbitrage, or you want to do the price arbitrage between the two crude contracts or options, when those get really going, and see what its recommendations are for you, and kind of go with that to refine your ideas even more.
On that note, Rob, I just want to clarify, did you prompt Claude to be more objective and critical, or did it just become that way?
No, sometimes so I do that. I have done that in the past because sometimes it's just way too agreeable, and I tell it, hey, like be critical, but not for the sake of being critical. Like be critical if you think something isn't a good idea. And I still feel like it's even a little too agreeable in that case. But this time I didn't give it that prompt. I was just like, oh, I want to create an option strategy. This is what I was trying to do earlier this week. And it came back with some caveats that I didn't give to it, saying, "Oh, hey, here's the issues." I actually went out and looked at the market and said, "Hey, like you're going to have a challenge executing this strategy because of these issues." I'm like, "Damn it. Okay, how about if we do this instead?" And then it was like, "Oh, well, let's you got to think about this and this and this and this and this." So it did actually I didn't tell it to, but it kind of did it on its own. So,
That's good to know. That's good to know because then it's by default, the way it
yes.
is now. So that's great. So, um, if I could try giving homework again, maybe like the homework will let people take a shot at. This is a bit more complex because you need to integrate MCPs across two different exchanges, not just Paradex. Is pick which exchange you want to integrate MCP with. Now, create your own funding rate arbitrage table. Okay, we've discussed in this video different ways to make it better. Rob had ideas, Dan had ideas that were all verbalized. Do what makes sense to you and share with us a screenshot of that funding rate arbitrage table that you built.
Yeah.
Okay, the
Yeah.
only we will figure out a price for you, but the only clause is one of the exchanges have to be Paradex. Doesn't matter which other one you use later, but create your ideal version of a funding rate arbitrage table. How about that?
Yeah, that sounds fair. That sounds fair.
That sounds fair. Yeah,
Yeah.
okay.
Yeah.
I think it's a tough one though, but we'll see. We'll see what we get.
Yeah, I think honestly, I think if you've got a tech background, I think setting up the MCP is not so much of an issue. I think for non-techies, it might be a bit of a challenge to get MCP talking to Paradex. And from what I've heard, I think there's some changes coming that there's actually going to be MCP baked into the Paradex terminal to make this easier, but I don't know for sure. I've just heard rumors, so I can't confirm or deny that. But that's going to make it way easier for people that don't have a tech background to start using AI and interfacing with Paradex if that is actually in fact on its way.
Rob is absolutely 100% on point with what the future holds for us with MCP and integrations. But right now, I think the first mover advantage is learning and figuring out how to integrate it into whichever like AI tool you use. And I think Claude is the ideal one at the moment. So before any other like simplified integrations come out, try it out for yourselves because I mean everyone wants an edge. I'm gonna try it. I'll be honest, I failed the integration when we first started talking about it. I haven't succeeded yet, so I'm going to
Oh,
give myself homework over this weekend.
well, here's what I would recommend. You could have Claude help you figure it out because I ran into some errors when I was integrating it. I basically I pasted the entire error message, which was very, very long, and reading it just manually was very difficult. I just gave it to Claude and said, what happened here?" And then it said, "Oh, go into this file, modify this and this and this, save it," and then it worked. So don't be afraid to use AI to help it fix AI, I guess.
There you go. There you go. That's the alpha here. Use AI to fix AI. Yes. All
Self-healing,
right.
self-healing.
Yeah, yeah, yeah. Good stuff, man. Good stuff. As always, really appreciate you coming on board. This was another fun one.
Yeah.
I am really looking forward to the next one and the ones in 2 to 3 weeks where we can do a bit more advanced stuff with options. But other than that, I think that's it for this time. And thank you, Rob, again for your time. I know it's always early in the morning for you. And thank you, Aaron, for tuning in. There will be homework, there will be clips. Keep a lookout for it.
All right. Sounds good. All right. Thanks, guys.
All
See ya.
right.